Welcome back to this Money Control live stream. You're watching Closing Bell with me, Nandita Khemka, and my colleague.
Hello there, I'm Yatin Mota.
Well, Yatin, Valentine's Day. And like I said in the morning, the markets don't want to see the color red on the screen. But, we did start off in the green, but then again, the texture of the market changed completely. And we saw deep red, not just red,
Correct.
deep red on the screen. And it's an 8 straight day of decline on the index. That's for the first time in 2 years that the Nifty has declined for 8 straight days. In fact, weekly as well, it's the biggest weekly loss in 2 months. The Nifty is down 3% for the week. The mid cap index, Yatin, is down 7% for the week. So that's the kind of fall that we are looking at. But of course, looking at the BSE listed companies market cap, that has fallen below that 400 lakh crore rupees for the first time since June 2024, since elections, right? And the Nifty, of course, gave up 23,000 this week. The good part is that twice or thrice that we have violated the January low of 22,800. We've steadily made a recovery from there. Today as well, it was looking like we'll be ending below those January lows. But last hour of trade, we saw a very sharp recovery coming in. The Nifty, in fact, managed to recover some of the lost ground. 22,900 that was reclaimed. In fact, even the broader end of the markets, the Nifty mid cap index was down somewhere around 3.5% at one point in time, but ended lower by about 2.5% or thereabouts. Bank Nifty also saw a good recovery from the day's low. So all in all, of course, lots of factors at play. The reciprocal tariffs that Trump spoke about last night, that was the main dampener, so to say. But from the Modi-Trump meet, there were no such negatives. And also the fact that reciprocal tariffs will come into effect from April and not immediately. So these are some of the factors that were at play today. But all in all, we can take heart from the fact that we kept that 22,900 level intact as we are ending the week. But very quickly, taking a look at some of the sectors that weren't doing well today, pharma, that was the big one. On reciprocal tariff fears, that index was down 3%. Metals were also down. PSU banks, the entire sectoral basket was in the red. Among the losers, you had Adani Twins for a second day running. We saw these two stocks, Adani Ports, Adani Enterprises, emerging as big laggards. BEL was down. Trent, Sun, Aisha Hero, by the way, I've seen big cuts this week,
Yes.
10-12% a piece. On the flip side, at one point there were hardly any gainers, but by the end of the day, we had some of them at least, most of them from FMCG pack, Britannia, Nestle, these ones. Even Hindalco stood out after good numbers. TCS and ICICI Bank were the other ones. But Yatin, quite a few movers and shakers, broader markets reacting to results mostly.
Yeah, results mostly, but today's highlight was the Nifty taking support at 22,800 once again. We fell briefly below that mark, and 22,800 is one support zone. Below that, probably a lot of technical analysts and experts believe that the fall could accelerate. But we have taken the support multiple times at these levels, and we recovered almost 150 points from the day's low. So that was the highlight of the day. However, the advance decline ratio, was close to 1:10. Most of the sectoral indices in red. But talking about Nifty 500 gainers, Chalet Hotels, Bear Crop, Ajanta Pharma, select movers, 2-3% gains coming in. But today, look at Concord Bio. Stock was down 20% after quarterly earnings. Deepak Nitrite fell 15% after the phenolics business saw a huge fall in overall margins. Jyoti CNC and Natco Pharma results surprised on the negative side. Both of the stocks fell over 10%. In fact, Natco Pharma is down 30% in the last two trading sessions. Overall, stocks like Swan Energy, LG Equipment, MCure, stocks like MMTC are at 52-week lows. So the list of the 52-week low stocks have been increasing steadily over the last few trading sessions. But clearly, the markets have seen a big fall, despite the fact that there were no surprises between the PM Modi and President Trump meeting. In fact, the outcome was probably positive, increasing, the oil and gas sales, increasing defense ties, increasing, the overall EXIM trade between the two countries. And despite that, there was no relief rally in the markets today.
That's true, no relief rally, but taking heart from the fact that we have closed above that 22,900 mark. But on that note, let me quickly introduce our guest for the afternoon. Joining me is Shrikant Chauhan, Head of Research at Kotak Securities. Shrikant, thanks a lot for joining in. Wishing you a very happy Valentine's Day. Looks like the markets are also, seem to be celebrating Valentine's for quite some time now. 8th straight day of sell-off. But are you spotting a bottom? Are we in the oversold zone? How are things looking like for the next week?
Good evening, everyone. Yeah, I think it's good that today the market has kept the color red Otherwise, it would have been completely contrast matching.
Hmm.
But yes, later on, we are expecting some relief in the market. We are going to see red color. Uh, we are going to see green color maybe in the next few days or weeks because the markets are completely oversold. And today, as you mentioned, despite the market has broken the level of 22,800, the market saw some sideways activity, and later on we see recovery. So broadly, I am of the view that and even if we see the market is falling below the levels of 22,800 on, let's say, on Monday or Tuesday, I'm not expecting market to sustain those levels. We could see again rebound. The next level to watch out for would be 22,600. There, the market is having excellent support. Even if we consider the broader, like overall structure of the market, then see, like, our markets are mainly falling because of FIs are consistently selling in the market, and they have like many advantages of investing in US markets because they're not only bond, gold, but also equities. Uh, Equities also doing well, and most of these indices are trading at all-time highs. So maybe because of this, we are seeing consistent selling for our markets, and here we are seeing like now bulls are tiring and they are liquidating their positions. So I am of the view that even though we are like going to see furthermore weakness, I'm not seeing the market to sustain those weaker levels. Again, we could see rebound.
Mm. Shrikant, what about the mid caps and small caps? A big sell off in all of those stocks, specifically to talk about the markets probably might stabilize at current levels, especially the large caps, because the valuations are now converging to a 10-year long-term average. But small and mid caps valuation wise, technically, are still susceptible to a bear attack. What is your overall sense, especially when you interact with a lot of HNIs, a lot of individual investors? Do you think, Feb and March could be still painful for all of these stocks?
See, like whenever we see rally in mid cap and small cap company in any year, in the following year we see some profit taking, and later on we see those sector, that particular, I'm to say mid cap and small cap sector, start stabilizing in the month of March, by the in the second half of the March. So this time also, I am of the view that second half of the March should be the time where we should look for adding them. But at these levels, I am expecting further more pain in mid cap and small cap companies. Right now, all our HNIs or super HNIs, they still have position in mid cap and small cap companies. Yes, of course, they have reduced position based on the overall. I'm to say the way the market has corrected. But broadly, I'm of the view that they are still like more towards mid cap and small cap companies, and they are like interested in buying large cap companies. But the problem is that they are not rebounding or they are not participating whenever there is a rally in the market. So this time also, if you see when the market was recovering from the lows of 22,800 to 23,800, we saw good amount of buying attraction in again mid cap and small cap companies. Although the sectors were like different, but broadly, I think the market is more. I'm to see the participants are more towards taking interest in mid cap and small cap companies, but that I think it will take some time. We could see some more pain in the near term, and in the second half of the March, I'm expecting again a rebound in these particular two sectors.
Hmm. I want to talk about specifically the pharma space. Today, of course, it was a big laggard in fears of a tariff from US. But given the fact that exports to the US in terms of pharmaceuticals, consists of mostly generic pharma products, and India, of course, is a major supplier to the US. But given the fact that healthcare is already so expensive in the US, imposing more tariff, that could kickstart another price hike cycle in the US, which will not bode well. So, in light of this and given the concerns of rising healthcare costs in the US, a big tariff may not come on the sector. That's, what brokerages believe. But given the fact that the sector has already seen quite a bit of a sell-off on a YTD basis, I think the pharma index is down somewhere around 11-12%. What is your sense? Should one look at pharma stocks, given the fact that they've corrected quite a bit, or do you think it's an avoid right now?
See, I think although this I'm going to say pharma as well as IT sectors are defensive. This time, a lot of confusion is there, and maybe because of that, we are not seeing good amount of participation or maybe uh, investment approach from smart investors in this sector. So if there is a medium to long term view, then certainly we should look for adding large cap pharma companies to our positional portfolio. But broadly, I'm of the view that we need to be very, very selective because a lot of things are there. I'm to say if some tariff comes on for pharma, or let's say discretionary spending comes down, because if currently US is not in the position of cutting interest rates, and if US is not going to cut the interest rate, then in that case most of the time we cannot expect increase in discretionary spending from IT companies. So broadly, I'm of the view that we need to be very, very selective, and from the pharma space, certainly we should look for adding large cap companies that I already said, but we also like hospitals, and there I'm seeing very good traction from smart investors, as well as the whenever there is a recovery in the market, we see good amount of buying interest in stocks like Medanta or Apollo Hospitals, NH. So if there is a medium to long term view, then certainly in the current fall we should look for adding hospitals over pharma companies.
Shrikant, globally there is no sign of a bear market, be it the European markets, be it Russia, Ukraine, be it the US markets. Everywhere we are looking at buying which is happening. In fact, China has also started to outperform India. Given the fact that our valuations have slightly deteriorated in the last 10-15 trading sessions, we are now close to 22 times PE on the Nifty 50. Do you think the buying should emerge, in the large caps, or probably FIs will now stop selling a few of these large cap stocks since valuations have turned slightly on the better side?
Our markets are falling mainly because of 50% because of global macros and 50% because of domestic earnings and valuations. If we consider global macros, then they are turning. I'm going to say they have started cooling off from the highs. The bond yield was around 4.75 some few weeks back. Sorry. Now again it is at 4.50 levels, and the dollar index was around 108.5, 109. Currently it is at 107. But if we consider our markets, then see, like here we have uh, I can say the inflation is in control. Also, RBI had started cutting the interest rates. GDP, if we consider at global level, then the trend is better. But earnings and valuation is something which matters. And if we consider the emerging market, I'm to say the basket of emerging market, then in that we are still expensive. And if we consider the FIS figure for last, let's say 15-20 days, then India is the only destination where they are selling. So broadly, I'm of the view that till we are not getting any, I'm to say FIs are not getting any comfort on the earnings and valuation side, they are not going to stop selling in this market. Also, uh, I am of the view that till the dollar index is not falling back to the levels of, let's say, 102 or 100 sort of levels, and bond yield is again falling back to the levels of 4.20 or maybe 4%. Till then, I'm not expecting these FIs are going to stop their selling. So, and if they are going to continue their sell-off, then all these large cap companies are going to remain under pressure. But if there is a view of next 3 to 6 months, then certainly we should look for adding large cap companies because they are definitely available at very decent levels. Yes, what we need some patience for buying and holding for next couple of months.
Right. Just a follow-up question on this, Shrikant. When it comes to earnings this quarter, did you find the private sector bank earnings better than PSU banks? Would you prefer a Reliance given the fact that stock has corrected decently? IT stocks have corrected decently. Not a bad quarter for them as well. So sectorally in the large caps, or probably in the Nifty 50, anything that you would like to recommend, or anything sectorally that you would be watching out for?
Yeah, I think like from the BFSI space, we like NBFCs. There we are expecting furthermore gains in the near term as well as in the medium to long term. The reason is because like whenever all these NBFCs fall to their extreme levels, I'm going to say in terms of NPAs. So whenever there are like very high NPAs or GNPAs, that is the time when we should look for investing in those companies, because then they get at very reasonable valuations. And I'm of the view that now this cycle is going to turn because of like RBI's measure and all. So broadly, I'm of the view that we should look for focusing more on NBFCs as compared to banks. But yes, from the bank space, we like private banks, in that we like ICICI Bank, HDFC Bank. So yes, of course, but NBFCs should be on the watch list. We also like capital market related stocks. There also we are seeing a very like gradual descent up move in next few months. And from other, I'm going to say the sectors, if we have to consider any particular sector, then in that we need to focus on auto companies. Most of these auto companies have also fallen to their support level, descent levels, and from here we could see some activity.
Right. From autos, would you prefer a two-wheelers now? Because Eicher Motors, numbers were marginal miss, but outlook was fairly positive. And both the stocks like Eicher and Hero have shaved off quite a bit this week. How would you approach two-wheelers within the auto pack?
No, I think again from the auto space, we need to be very, very careful, and we have to focus only on those companies where the fundamentals are either better or they are turning better. Like Maruti did really well in last 2-3 quarters, and now the stock is showing signs of further more gains, and we could expect some better results for next few quarters. Maruti's are top pick at current levels. We also like Mahindra and Mahindra. But if we consider other stocks like, let's say, Hero Motors or Eicher Motors, they have their own problem, and I'm not seeing any major improvement in these particular companies in the near term. So if there is a medium to long term view, then we should look for adding stocks like Mahindra or maybe Maruti and a few auto ancillary companies.
Right. Shrikant, what about quick commerce? Your thoughts on this space? Competition is heating up and how cash burn is increasing. We saw Swiggy
Yeah.
reporting numbers, and clearly on the quick commerce side there was margin pressure. Stocks like Zomato have already shaved off quite a bit. How would you approach this particular sector now?
Yeah, see, like now the euphoria is over, and again, all these stocks are coming down or maybe coming back to their real valuation. So we may see some more decline in the near term or maybe next for next few months. Now, what we need patience to buy them and hold for next couple of months. So we need patience to buy and hold. But at the same time, if there is a like very a short-term view, then we should look for taking some trading bets in this particular companies. Otherwise, we need a very long-term view to buy and hold. But yes, in that we like few companies like we like Zomato, we like Swiggy. Also, we are like we have bullish view on delivery. So these are the companies on which we are bullish. But now, based on their overall performance in the last quarter, I think all these companies are going to take some time.
Shrikant, before we let you go, anything that you like, in the short to medium term, be it the new age stocks, be it large cap, mid caps, any sort of preference or anything that you would like to buy, what are you exactly advising your clients who are probably sitting on some cash?
Yeah, Yatin, I think see we are like more we should more focus on capital market related companies and also on NBFCs. There the comfort level is very high, and the reason is because like whatever the announcement has came in the budget as well as after the RBI, I think both these announcements are positive for companies like Bajaj Finance or Shriram Finance, and from capital markets, let's say HDFC, AMC or NAM India. So these are the companies where we should look for investing, because see, what is important right now is to invest with some confidence. We need some confidence while investing, and I think these companies can give you a much better confidence while investing.
Yeah, and I hope the confidence returns when it comes to the markets as well for next week at least, because this week hasn't been all that great. 26 lakh crore worth of market cap gone this
Correct.
week itself. But with that, Shrikant, would like to thank you for taking out time and joining us this afternoon. Wish you a very happy Valentine's Day once again and a very happy weekend as well. And hopefully we'll come back to the color green when we come back on Monday morning.
Absolutely. Thank you. My pleasure.
Thank you. Well, then we've come to the end of this edition of Closing Bell. Ending the week on a very somber note. But let's hope next week will be better, because all the major triggers now
Yeah.
are out of the way. Earnings season is almost ended. You had that Trump Modi meet as well. Budget is out of the way. RBI
Correct.
also gave a rate cut boost. But let's see now. Whatever happens, it's just I mean, we'll have to see how markets really behave here on. But with that. Thank you for watching and have a great weekend. Come back and join us Monday once again. Goodbye.